All right, guys, so it is the big day. We did see Bitcoin starting to trade on a lot of these ETFs. Essentially, we did see price action, as you can see right here. Fresh, brand new chart to do technical analysis, hopefully in the next upcoming months. We're going to be talking about why Bitcoin is currently retracing at the moment as the big awaited hype is finally over. And could this be the buy the rumor, sell the news type deal? We're going to look at the shorter term time frames, the longer term time frames as well too, and the CPI data that I was indicating in the previous video that you should actually be paying attention to. If you want to become a part of the Crypto Bros family, consider subscribing. Give this video a thumbs up, as it does help out the algorithm reach as many people as possible so that they can also maximize their portfolio as well too. So let's not waste any more time, guys, and actually get into the video, guys. So as we did see, again, the ETF started actually trading on a lot of these platforms, and it did bring in about more than $1 billion to $2 billion in volume just within the first half hour of this. And Bitcoin actually started trailing up all the way to $49,000 to $50,000, which is the key area that we've been discussing for the past week to look out for Bitcoin to put in that last leg in terms of this hitting that $1 trillion market capitalization. It did not quite do that yet. You need to get above $50,000 for Bitcoin to hit that $1 trillion mark. However, it is a key psychological level to get above on the weekly time frame. As we can see, even if we were to actually look at our fib resistance line, so if we were to grab from the all-time highs from 2021 all the way to the bottom of this to 2022 and the bear market bottoms, we can see that the 786 comes in around the 50,700 mark area, which is very close to where our resistance points are actually coming in, to breaking above. Now, if we are actually able to break above this $50,000 area, our next critical area of resistance you're looking at is really making new all-time highs at that point, because there's not much resistance for Bitcoin to really get above. And if this Wall Street money, right, if these ETF do bring in billions of dollars to Bitcoin, this is going to be like nothing. This is going to be like butter. However, there is a bigger macro picture that's actually being played out, and I told you in the previous video to actually watch out, because it's going to be very important in terms of the bigger landscape, and that is the CPI data, which came in a higher than expectation. Okay, so the expected forecast was about 3.2. We actually came in at 3.4. Okay, so a 0.2% higher than the expectation. Now, this is also higher than the previous CPI data from the previous month, coming in 0.3% higher. And what this actually came in at is that food was a lot higher, shelter was a lot higher, and vehicle expenses was at higher levels as well too. So meaning in the next FOMC meeting that's going to be happening in about 20 days or so, is that Jerome Powell is going to have a more hawkish tone. And like I said previously, guys, is that, look, the rate hikes are not completely out of the table. They like to have a more hawkish tone to ensure that inflation actually gets under control. However, at any given point where inflation comes in higher than expectation, then that could further dampen the possibility of having reduced rates in this particular quarter, meaning, that we more likely won't see rate cuts probably until next quarter, right? So if this month comes in higher and the next month comes higher, what do you think Jerome Powell is going to do, right? He's going to more likely not ease rates, and that there is a probability, 97.4% chance, that there is not going to be a reduction in rates. Okay, so that means rates are going to stay stagnant, and the longer that rates actually stay stagnant, is actually going to mean bad for Bitcoin risk-on assets. Okay, now we'd like to think as Bitcoin as not as a risk-on asset necessarily. However, the bigger economic picture will play a bigger role in regards to where Bitcoin starts to break some key resistance areas. Now, with that being said, even the traditional markets started off on a negative note, dropping more than 1.5%. As we can see, we opened the day just roughly around 16,775. We're trading around 16,632. However, Bitcoin is more taking the bigger hit of this, dropping almost from that, about 7 to 8%, guys. Okay, so that is definitely a bigger hit overall for Bitcoin. But with that being said, what are some key target areas that I'm particularly watching for here is as long as we can stay on the shorter term time frames around the 4-hourly above 45,758. I expect further continuation to the upside, maybe retesting that 49,000, maybe ranging in this particular area for quite some time before breaking off. Again, guys, these areas are coming back from the previous bear market, right? It's going to take some time for Bitcoin to actually get above these last steps of resistance. Now, to my thought process, again, is that we're looking for that next leg up. How far this next leg up comes in? Well, my expectation from what I've been analyzing and looking at in terms of the strategies we've been applying is looking at that $50,000 target area coming in at the 786 FIB resistance line. So these are some key important levels previously looking at, even talking about from previous past, rallies. Bitcoin has put in tops around the 786 level. So it's not out of the question. This is, a major top for Bitcoin. However, I'm not too quick to call this as the top yet, as long as we can hold the expectation above 45,900, I think we should be okay. Now, there is, again, a confluence of region in this area, building that support plateau around the $44,000 to $45,000 in this zone. So as long as we're okay to close above those, we should be fine from here. Now, looking at the stochastic on the daily, just following up on the previous analysis we did, we are posturing to the downside. Downside momentum still playing pressure in regards to these lower highs. As we can see, we still did not break above this lower high, and that the expectation looks like we are still setting in another lower high in this. So the downside pressure for the bears are still continuing here. In regards to the 2-day, still same thing, coming to that particular resistance, putting in lower high, and the expectation, the longer this actually acts as lower high with price action putting in higher highs, that means, again, bearish regular divergence is going to be still continuing to apply its pressure in regards to this market. We start to fall below this particular zone, guys, this is not going to look too good for Bitcoin overall, and more likely looking for a major macro, or I would say medium to macro term top here before looking at further upside targets from that point. But just looking on the daily time frame, as long, again, we're above 45,000 on the MACD, 45,700, we should be okay. As you can see, those are the target areas we're talking about on the MACD, indicating the same thing for us. If we look on the 12-hourly, downside pressure is continuing at 46,395. The 2-day is around 46,150. So as long as we're above that area, the further continuation to the upside from that point. So again, guys, keep into consideration anything below that closure of a daily will spell very negative for Bitcoin in these regions, coming back down to $40,000 level. This is, I think, a bigger game that's being played out, as Wall Street, again, have been here in Bitcoin for quite some time, but ETF kind of cements that level of volume coming into Bitcoin, which can see more volatile moves in the near future. Again, I'll leave you off with this. I hope you enjoyed this video. If you did, give it a thumbs up. Until next time, bros, as always, stay profitable.